Is your family farm's future uncertain? Silence may be the biggest risk of all. Discover how open conversations and gradual planning can secure your legacy and empower the next generation. Don't wait. Start the dialogue today. Learn more and download a transition planning checklist at fcc.ca/knowledge.
Okay, let's get to the markets and the impact here on specifically canola. And we're talking to John Driedger with LeftField Commodity Research based out of Winnipeg. How are we doing today, John?
Doing fine, Shaun. How are you?
Doing pretty good. Okay, so earlier today we talked to Rick White, President and CEO of CCGA. We're talking about the farm group dynamic around the issue on canola tariffs from China. Of course, we have tariffs on seed, oil, and meal at this point and to different levels. What impact are these tariffs having on the price today, John?
I mean, the short answer, Shaun, is it's negative. There's no escaping that. I mean, at the end of the day, China has been overwhelmingly our largest market for canola seed. In aggregate, the value of the products that get shipped to the U.S. is our largest market. But in terms of seed, obviously, China is our largest market, overwhelmingly so. And so there's no escaping the fact that there's a negative impact. But it's really hard to quantify exactly what that is because, as we all know, there's multiple things that work on the price of canola. We've had soybean oil, for example, pulling back a little bit recently as canola has softened. Our crop has been getting bigger over the last, say, 6 weeks or so. Like all of those things have an impact as well. So, to kind of pinpoint, especially now at this time of year, what exactly the impact is in the short term is hard to know. And I think it's also one of those things when you think about the cumulative effect over time might look different than the short-term effect. And so, it seems like it should be a simple answer, but it's not, and maybe changes over time. So yeah, the short answer, I mean, obviously it's negative, but to kind of parse out exactly what the softening in canola prices,
what is that worth?
Yeah, exactly. What does that translate to the Chinese announcement? That's more difficult in my view.
Okay, so China, second largest market for Canadian. If we look at seed, oil, and meal, China's the second largest market overall. America number one. China, though, the largest market for seed. Okay, so if we were to look in our crystal ball, does this mean if these tariffs hold in place till March of 26, which is the length of time for this anti-dumping investigation to happen, will China be totally out of the Canadian market? Do they look at Australia now as their go-to supplier? What can we expect from an export perspective?
Yeah, so again, there's these things are always cloaked in sort of ifs and scenarios, but certainly it looks like China is increasingly open up to Australian canola seed. So previously, for phytosanitary reasons, they had not been taking any canola seed from Australia. Yeah, yes. That is starting to change. There is some business that's being done. And so, how we potentially see this playing out is that if China opens up to Australian seed, chances are they take a pretty good chunk of Australia's exportable surplus of canola. So, for folks that maybe don't know, Australia does a whole bunch of non-GMO canola as well as GM canola. And so a lot of their non-GMO exports go to the EU. But a lot of their GM canola exports, then maybe potentially go to China. So now, in terms of what does this mean? So, maybe that opens up some markets for Canadian canola that otherwise Australia was shipping to. So we could see a scenario where there is maybe some shuffling of some of the trade flows. So I think to say, we're not selling to China and therefore that's sort of a hard number of what we will not export. I think it's a little bit more complex than that. I could see us sliding in and filling into some other markets that Australia will now maybe not export to. But I think within all of that, with China, there's no way that Australia can, for example, fill the hole that's left by not buying from Canada. So I think a chunk, but certainly not anywhere close to what what Canada was able to export to China before. So they probably take considerably less canola in aggregate. So,
yep.
That's kind of a little bit how we potentially see this unfolding here. If, for example, as you say, maybe tariffs are in place till late March or end of the crop year or whatever that looks like.
Now, some Canadian farmers are maybe not aware, but if you travel in U.S. agricultural circles, one of the big topics right now is the fact that China has bought no soybeans for this fall. And we are in the traditional buying season where China steps up and buys a bunch of U.S. beans and moves away from South America. They are definitely indicating and signaling that they are very much more interested in beans from Brazil and Argentina. Substitute effect. It can we talked about Australian canola, but can China buy beans out of South America to substitute for Canadian canola too?
Yeah, like as we potentially see it, and so one of the things that sometimes helps is looking a little bit at what's happened, in the past. And so we think about, for example, in 2019 to 2022, when we had this last, trade disruption here with China, and they were still buying Canadian canola, but from a couple companies specifically were sort of shut out of that market. Their volumes were way down, and just kind of some back of the envelope math would suggest they probably were importing about maybe close to 2 million tons less canola than they did sort of before and after. And so, if we think about a little bit that scenario, potentially what, Australia could fill in, maybe some small volumes from elsewhere, we maybe see China importing about 2 million tons less canola than they did previously, give or take. So in the whole grand scheme of things, I mean, when you think about them, for example, importing, 100 million tons of soybeans, they import palm oil, they're maybe importing some soy meal from Argentina, those sorts of things. I mean, the loss of, say, about 2 million tons-ish of, canola is not that large a gap to fill up with other products. And, and one of the things I think we have to think about in terms of China, like if the importance of this is to make a political statement, no matter how much maybe some of their citizens and industry would prefer Canadian canola, they maybe don't care that much. they'll maybe, quite happily, do with less. Maybe their most inelastic demand, again, gets filled by Australia, maybe a couple other, again, small volumes from other importers. They'll import some oil. They've already haven't been importing oil from Canada for some time in any meaningful volumes. The most inelastic demand maybe gets filled from elsewhere, and they'll just simply make do with other, with other products to kind of fill that gap. And it might not be their preferred option, but it's not like there's a huge hole in the whole aggregate, sort of oil seed, veg oil, protein meal pie to fill. That's certainly not insurmountable. So I guess to answer your question, Shaun, yeah, I think they just fill that hole with other products if they're not going to purchase Canadian canola, and other countries can't fully fill that gap, which we don't see as being very likely.
So we probably need to pay more attention in Western Canada to the trade flow of American soybeans and that purchase behavior to China, because that may be a bit of a signal that things are getting friendlier. I don't know. I'm scraping for things to feel a little bit more positive about here, John, when it comes to canola exports.
Yeah, and these things are incredibly complex. And one of the hard things that's, to try and navigate this is you're trying to forecast what governments and policymakers, are doing for political reasons. One of the things, unfortunately, the Canadian farmer is kind of, collateral damage in terms of a much larger, trade geopolitical chess game that's going on. And so as much as we'd like to think about, it's A and B, we'll have a couple meetings and just sort of clean this thing up. I think it's a whole lot more complex than that. And so on the one hand, it maybe, is easy to be, frustrated. Obviously, we're all frustrated by it. It's also the kind of thing that can change as well. And so it's very possible. Our base scenario is not that we're likely to start all of a sudden shipping a whole bunch of seed to China, but, again, it could change all of a sudden, for political reasons. This is a political decision. And so for political reasons, they may suddenly remove the tariffs, or they may, for example, with China's and U.S. soybeans, they might suddenly start buying U.S. soybeans because, at the stroke of a pen. That's the reality of it. Impossible to predict or handicap, but it is a possible scenario, even if it's maybe not the most likely. It's possible. You just don't know. It's the uncertainty that's really difficult to navigate.
One of the big pushes here for the increase in domestic crush capacity for canola in Western Canada has been biofuels, renewable diesel, and the opportunity for SAF. I think that coming out of that budget reconciliation bill, Canadian canola is a domestic feedstock in the U.S. That's a big positive. But we also need to be talking more as our largest canola market being the U.S. We need to be talking more about that 50% RIN value issue and trying to get that changed for the long term, because that will also have a big impact on the demand for Canadian canola products.
Yeah, and just sort of adding to all the, sort of the matrix of uncertainty, how this biofuel policy shakes out in the U.S. It's just another piece of this policy uncertainty, and who knows exactly how it's going to play out. But on just kind of shift on a bit of a, let's just say, a bit of more optimistic or some of the positive things that we see with canola. And you mentioned the larger domestic crush here, Shaun. I mean, we see a big increase in domestic crush this coming year as some of these plants, expansions and new plants come online with capacity. And so, in terms of the China issue, and again, not to at all suggest that it's not a big deal. Of course, it's a big deal. But the fact that this coming year we're going to probably crush 1 million or more tons of canola than we did last year, means that our reliance on exports is a little less. I mean, do we still have to export? Do we want that market open? Absolutely. But the fact we're crushing more domestically helps. And, then as kind of sliding back into the biofuel issue, I think one of the things, Shaun, and again, in a perfect world, like Canadian canola, preferred feedstocks, all the subsidies, all those things, that would be ideal. But we do see a positive outlook for U.S. demand for canola oil, even if it isn't maybe the preferred feedstock, because if, for example, they end up sucking in a whole bunch more soybean oil, that leaves a supply hole elsewhere that I think canola can slide in. So, we view that outlook as positive, even if we don't maybe get it exactly as we'd like on the policy side. Again, in a perfect world, China's buying our canola. Canola is the preferred feedstock in the U.S. for biofuel. That would be sort of the holy grail. But on the biofuel side, we still think that there's some positive things for canola crush. We still think we're going to see big crush volumes. And so those are some reasons why, I think, we can have some optimism, going forward. It's not all negative on the canola story.
Yeah. So you think there's a positive element here to what canola could do in the next 12 months related to, especially in relation to how we feel here today on September 9th.
Yeah, sentiment is really poor, and again, understandably so. I mean, basis levels stink in the country. I'm sure exporters. Typically China has taken a whole bunch of this volume. Early in the crop year, we're shipping canola. A lot of it's going to China. There's big volumes. All those things happening. I mean, that's sort of the natural flow, and so again, the absence of that huge exporter, which tends to often front load those purchases, where some of our other key markets might be a little bit more evenly across the year. It just, of course, is sentiment is poor, and understandably so. But we're not necessarily negative canola prices if, say, we look into, say, for example, the second half of winter into spring. At current levels, we're sort of cautiously optimistic. Again, we'll see what the size of our crop is. There's all this uncertainty. U.S. soybeans, bean oil, all those things obviously impact prices for canola. But we're not negative on the canola market when we look a little bit further out. We might go lower in the interim. That's very possible, but we're not negative as we look further out.
I haven't updated my numbers for the past couple of days of trade, but on Saturday, because clearly I have nothing better to do, I was looking at NOV soybeans and NOV canola. What I found interesting is, although there are periods in the year where they have separated, like this spring, for example, canola really, moved to the upside and it's come to the downside. They're essentially, from a price performance standpoint, even, which I thought was kind of interesting.
Yeah, it is one of those, again, sometimes with, in the heat of the moment, you sort of get caught up in the day-to-day news flow. You take a step or two back, and sometimes that can give you a little bit of perspective. One of the things that, again, we're talking about biofuels, we talk about oil, in terms of the overall oilseed complex, I mean, this really is a sort of an oil demand pull, sort of a meal supply push type of a scenario because of the biofuel component. And so, relative to, say, soybeans, like canola is actually pretty well positioned, all else equal, because, again, oil is a much larger component of that canola crush. The meal value is considerably less. And so as we sort of have sort of a trend, towards strong oil, weak meal, all else equal, that's helps canola, or in a weaker environment hurts it less, if you will, than for soybeans. And so you look at what bean oil share of the crush has been, record high levels recently. Again, there's ebb and flow day to day. All else equal, that does help canola. So, so those are some of the things that are sort of going on, again, if we take a step or two back.
Would it be positive, John, for the Canadian government to take a stiffer stance on UCO?
Well, I think certainly that helps. I mean, at the end of the day, if we have a stronger stance on UCO, if there's less feedstocks coming in from elsewhere, all else equal, that supply that needs to get made up with canola oil or other domestic veg oils or those sorts of things. So yeah, I think certainly it helps. Anytime you can sort of, let's say, keep other supply out, all else equal, that helps. Not to mention, again, some of the questions around the validity of whether it's actually UCO and all those sorts of things. Just strip all that stuff aside. It's less supply helps. But again, I think from a Canadian perspective, I think we're going to crush to pretty much capacity again. I think crush margins probably are going to be pretty favorable in sort of a low seed, strong oil type of environment. Those plants will have an incentive to crank away, and I don't think there's going to be any trouble finding a home for the oil. Again, even though there's some details on this biofuel policy, so that's a positive side of the story.
Final question to wrap up. Can biofuels replace the Chinese market? We hear a lot about this in the US when it comes to soybeans, a diversification away from China. And it's a hot topic right now. Diversification away from China exports and being so reliant on China is a strong domestic biofuel market. Is that also the case for Canadian canola?
Well, I don't think that's the case necessarily, Sean, because at the end of the day, it's your crush capacity, right? So ultimately, we can only crush as much as we can crush. So unless we're suddenly going to, add, several million tons of additional capacity on top of what we already have, there's no replacing that, and I don't think that that's likely, anytime soon. So the short answer is it's not going to happen. But having said that, again, I mean, crush will consume a larger portion of our demand than ever before. We're going to consume more of our domestic production than ever before. We still have other export markets we're going to be shipping to. And so, all of those things, they'll help buffer somewhat, the impact of the loss of seed exports to China. Yeah, again, you can't paper over that. It's obviously, a negative thing. But there are other places where it'll slide in. And again, it's part of the reason why our outlook for canola prices is maybe a little more optimistic than sort of today's sentiment, would suggest and feel. And again, understandably so for farmers, particularly in an environment where so many other crops are poor, pulse prices are collapsing and all those things. It just sort of feeds into that real negative vibe right now, which again, I understand that, but we're a little more optimistic when we look further out.
Yeah, we were talking yesterday about Pakistan and Bangladesh. Those are two markets, but probably we're a little bit more focused on all of a sudden.
Yeah, suddenly, we end up shipping more to the UAE. We ship more to some of these other markets that Australia would typically send a lot of supply to. Maybe we send a little bit more to Japan than we have in the past, and that's how you sort of backfill. We'll probably send a little bit more to the EU than we otherwise might have. Again, that's not going to make up for that China-sized hole, but it all helps. Again,
Right,
it makes it a little murkier than just a simple, we lost China, therefore there's 4.5 million tons of canola that are just going to sit back on farm to Western Canada. That I don't think is the case at all.
Yeah. Some people have been kind of trying to make it out that way, but that's not how.
I think that's too pessimistic. We'll see how it plays out, but I think that's too pessimistic in our view.
And in the case when Viterra and Richardson's lost their export certificates into China last time around, didn't a lot of this end up in the UAE and ended up in China anyway?
Yeah, I mean, so UAE has, again, just like, we think about our domestic fuel and maxed out by our domestic crush. There's an element of UAE and they only have so much crush capacity as well. But to the extent that maybe Canada becomes the primary supplier, okay, now there's maybe a few 100,000 tons or maybe 500,000 tons more that we send there that otherwise, for example, Australia might have. And so then a UAE will ship that oil and meal to China. So again, there is some reshuffling of some of those trade flows that'll happen. And so again, it's there will be some backfilling of some other demand, which again, somewhat buffers. Again, it obviously doesn't make it go away, but it does somewhat buffer it. So, I think that's, some of the lens through which we try and navigate this situation here. And we're looking forward for, price outlooks and so forth.
Interesting times indeed, Mr. Driedger.
Interesting
times. Hey, John, thanks a lot for joining us here today. Appreciate it.
I always appreciate it, Sean. Thanks for having me.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and RealAg Radio.